Hey guys, this is Mav with Ready Set Crypto, and today's video is going to be a little bit different. So for those who don't know, Doc is sort of the other half of Ready Set Crypto, and what he kind of brings to the table is decades of experience in trading traditional markets. So his mission is sort of leveraging that experience in traditional markets and bringing that into the crypto markets to help teach people how to trade the space. Because obviously the rules are still being written, we're still trying to figure out the best way to trade it, but having that previous experience, Doc is really able to guide people in ways that most people you'll see on YouTube really can't do. So where I'm more of a fundamentals trader, Doc is going to help you through some of the more technical aspects of trading crypto. So as such, he gave a webinar a few days ago about short-term swing trading that I hope you'll find interesting and learn a lot from. And if you want to learn more about this topic, he's currently giving a class on it. So definitely check that out if you're interested in learning more about it. Meanwhile, I'm still in New York City, traveling for the New York City Blockchain Week. But I'll be back on Monday and producing videos for you guys, so look forward to that. But in the meantime, I'll turn it over to Doc. Talk to you guys soon. As always, this has been Ready Set Crypto.
Good evening, everyone. My name is Doc Severson with Ready Set Crypto. I am actually also joined on the side by Mav, who is coming to us from location in New York City, attending Consensus and also the Crypto Influencers Awards. So tonight we're going to be talking about short-term trading strategies. Now, before I get into the content tonight, here's our risk disclaimer, which basically says that if you trade like this is a game, you will lose all of your money. Now, we don't want you to do that. We want you to take this seriously. Treat this like a profession, and don't do that. Don't be like your regular retail trader. Okay, so I'd like to give a special welcome to our premium members that are out there that are subscribers to our newsletter. And tonight, our goal is to share some guidance and ideas on how to utilize short-term trades while we wait for the primary bull to return. Today was another one of those days, right? So we've got about 40 minutes of material for you, and then we'll answer your questions, so plus and minus. So we'll wrap up after about an hour. I am a firm believer in getting these things done and in on time. Want to be respectful of your life and your commitments to your own time. So do me a favor, guys. The only way that I can get done here tonight, and I know that this is tough because a lot of times you'll see something and you want to know an answer right then and there, but please hold your questions until we get to the Q&A period. Okay, so I'll get to that soon enough. Just write them down, and then if for whatever reason we're not able to get to them, just go ahead and submit them into email. We'll get your answers one way or the other. So before I get too far into this, I'd love to do this, but I cannot comment on your portfolio. Can't talk about your portfolio. The Securities and Exchange Commission will come along, knock on the door, and haul me off to the pokey if we start doing that. So tonight's topic is about the short-term trading strategies and how to identify opportunities to trade them. Also, now when we get into trading and trading activity, there's always the question, I know that there's accountants out there tonight. I feel it. I can't answer questions about taxes. This is a massively complicated and fluid topic. It's changing all the time, and it depends on where you live. So please don't go there. Let's not major in minor things. My personal belief is that you should go create a tax problem. Seriously, go create a tax problem. Create so much revenue from your trading activities that it does create a problem for you, and then hire somebody else to solve it for you. So don't work from the inside out, work from the outside in. Now, some of you know me, some of you don't know me. This is me. I am a poster child for the drug Rogaine. You've heard that one before. I'm also a husband, father of 3, student pilot, former product manager, engineer. Quit my 6-figure telecom job to trade full-time. I couldn't stand it there one more day. I had to go do something different. I had to pursue my passion, and this was, about 14 years ago now. So since 2005, I've also been a coach for options, futures, technical analysis, crypto, and also neuro-linguistic programming. And so that's been for the last 14 years. So I tend to think of myself as a little bit of an innovator. I like to do things in a different way. I like to reach people with different message and not just rehash the same thing. So I have been trading for about 21 years. I can't say that I've seen it all, but boy, we've seen some massive volatility in the last 21 years. I also wrote a book called Hacking the Holy Grail. What I found is that everybody is looking for, in fact, I even got an email tonight. Somebody is looking to get rich quick. They're looking for the easy path to prosperity, thinking that there must be some kind of holy grail that exists out there, whether it's a strategy or whether it's a chart pattern or whether it's a different form of trading instrument, thinking that there must be some kind of holy grail that the professionals are hoarding to themselves. It is not. That's why I wrote the book. Actually, the holy grail is between your ears, but we'll get there. So one caution that I want to share with you guys tonight before I get into this material, that any chart that I show with past data is unrealistic. And this is one thing that always used to bug me, is I would sit in attendance in a webinar or I'd be at a seminar and somebody would show chart after chart of these perfect setups. And I'm thinking to myself, are you kidding me? You didn't really do that. So tonight I'm showing you these examples just because I want to show you what a setup looks like. But I'm not going to sit there and say, aha, this was the one trade that allowed me to retire. It doesn't work like that, right? So I'm only sharing past data charts with you here to provide clear examples so that you know kind of what you're looking for and not to mislead you into thinking that you can accomplish the same without a lot of hard work and dedicated study. Okay, so here we are. Why are we having this discussion today about short-term trading strategies? What's this problem that we have to solve right now? We've got a bit of a problem in the crypto market right now. We need to solve this. So Bitcoin and most of the crypto has been in a bear market since we crossed into 2018. There we are right there. Once we hit 2018, all of a sudden, wham, it's been a nasty, nasty bear. 80%. Try finding an 80% bear market in the equity markets. They freak out when they hit 20%, actually even 10%, and people lose their minds. So you guys are really learning how to tame the volatility, I'll tell you that. And so this has created a weekly downtrend. If we go into the weekly chart, so the weekly chart is actually even more powerful, right? So it's 7 times as powerful. So we now have a weekly downtrend showing here. Weekly downtrend. And so it's not surprising that we've started to turn down again, because once you change polarity, once that tide shifts to the downside, it stays with you. That momentum does stay for quite some time. Okay, so the buy and hold strategies that's worked so well here, which is where a lot of people, through fear of missing out, jumped in at the very top of the market. So everything that works so well over there, you're swimming against the tide now, as long as the primary trend is still down. So that's no fun. There's got to be some way that we can find some edge and some value in this market, right? So the short-term problem here with all of the longer-term strategies is that they're going against the trend of the overall market. Now, I'm just showing Bitcoin, but I'm showing Bitcoin as kind of like, it's almost like an index compared to the rest of the market. It's still the big dog out there. It's still the 800-pound gorilla in the market. So your choice is either to wait it out and hold on for dear life, or you can learn to find edge inside of the current market. I'm always a fan of listening to what the current market is trying to tell us. Believe it or not, the price in the market is always trying to tell you what it wants. Unfortunately, a lot of times we're unable to see that because we've got a particular lens in our eyes and we can't see it. But the market's always trying to tell you what direction it's going and what it wants. It's merely up to us as to whether or not we're going to pause to listen to what the market has to say. Okay, so here we go. Here's my top 10 list of ways to create short-term opportunity in today's choppy bear market. Number 1, get right into it here. And these are in no particular order. So don't think that this is, I'm going, saving the best for last or anything. These are just 1 through 10 in no particular order. And pullback trades. Pullback trades are one of the short-term trading setups that we need to learn about. So the idea with these trades is to catch short-term swings of perhaps anywhere from 10% up to maybe 50% or so within the span of 2 hours to 2 weeks. So this is kind of what we're talking about. This is the time frame. We're not going to be holding these things for months and months and months. If we are, we're holding a bag, right? We don't want to be doing that. We'd like to get these tight execution trades, get in, get our fair share, get out before the market turns down again. So once we show a strong probability of the price moving higher in the short term, we're going to look for a pullback in the price. So I'll show you a visual of what this looks like here. So even within the bear market, we're still going to see strong relief rallies. In fact, some of the strongest trends and rallies that you will see are actually called bear market rallies. Bear market rallies, there we go. There's 3 bear market rallies right there, which were all pretty strong. Okay, look at this. I mean, we had, just from February to March, we had a move from about 6,500 to 7,000 all the way up to 12,000. And that's a 100% move. That's a 100% rally within there. We just get used to these mind-numbing numbers when it comes to things like Bitcoin. And recently we had a move from about 6,500 up to about 10,000. Again, another simple 3,500 point move. There's plenty of room to be able to find edge inside of here. So, like I said, there's lots of room within these swings to create value, which we can add to our account. So here's the trick. We have to identify when the price is in a swing to the upside that you can play within. Again, as I go back to this chart, it's easy to do this in the rear view mirror. It's easy for me to go back and paint these lines on here and say, well, you should have gone long here. You should have gone long here, those kind of things. Right? It's easy to do in the rear view mirror, but it's much tougher to do on the hard right edge of the chart. So this is where I'm going to use what I think is a very interesting, pragmatic, practical tool, Heiken Ashi candles. All of you have access to this in your charting packages out there. This is what these look like. Now I'm going to flip back and forth here just for a second. This is the Heiken Ashi candle. Notice that during a swing, all the candles appear to be painted the same color. Now I'm going to quickly flip back to the normal candlestick chart. Okay, there we go. There's the candlestick chart. I want you to frame that picture in your mind. Now I'm going to flip to the Heiken Ashi. Notice how on the candlesticks there's alternating like red and green, like in this particular swing right here. Now I'm going to flip back to the Heiken Ashi. There we go. So during a swing, they typically stick with the same color during there, and this keeps you in the swing by the algorithm in which these are painted. Okay, so the Heiken Ashi candles give a proxy for direction. One more time, guys, I cannot take questions during the webinar. If I start taking questions during the webinar, we'll be here for about 3 hours. You guys don't want me to do that, do you? Okay, so I'll take questions. For those of you that just showed up, I will take questions at the end of the presentation here, which should be just in about half an hour or so. I'll be done with this, and then we'll take questions, and then we'll have time for everything and get done on time. All right, so these are the Heiken Ashi candles. These give a proxy for direction. So I'll use the daily chart as an anchor chart and trade in the direction of the upside swing when it arrives. Okay, so I'm going to wait on that swing to come. So from there, I just need to identify a signal to enter. Just because the Heiken Ashi candles start printing green, I can't just enter because of that. I need a smaller time frame signal. So what I'll do is I'll drop down to anywhere from a 1 to 4 hour chart to do this. Anywhere from a 1 to 4 hour chart. So this is the fractal notation. So I trade what I call fractal energy trading, which is probably way beyond the scope of tonight's presentation. So in this case, we can use an oscillator. Doesn't really matter which one. There's several of them out there. I'll show you one of them here. Okay, so an oscillator would be something like this. Now, keep in mind, this was a former downtrend. If we go out to the daily chart, this is where the daily chart's throwing off those red Heiken Ashi candles. And that's the downtrend. We don't want to be trying to pick the bottom there. This is trying to catch the falling knife, trying to go long in the midst of a downtrend. Don't ever do that, okay? Wait until the anchor chart flips to green to an uptrend here. We start to flip to uptrend, green candles on the Heiken Ashi, and now we are green light for the next signal, which comes along right there. There's our hook into the oversold area of this particular oscillator, which is just a simple, slow stochastic. And there's our entry right there, okay? Again, my caution to you is going back in the past, looking at information like this, makes it look so easy to do, but trust me, this is not that simple to do because that is not an easy trade to take. Your mind will go against you and say, but the price is still going down. Nope, the signal's there, so you take it. What you'll find is that the very best entries that you will ever take are the ones that feel the worst to take. You won't want to take them. That's the difference between a retail trader and a professional, is that you learn to take the trades that don't feel good. Okay, so I will also use a close below the lower Bollinger Band as a long signal, assuming that the anchor chart is moving up like this. So here's the Bollinger Band. Now this is the same price channel, right? This is the same price action, and all I've done is throw some Bollinger Bands on there. So we had that former downtrend. There's the former downtrend over here. Okay, former downtrend, now about to become the next Masters champion. There we go. So there's the uptrend that kicks into gear as shown by the Heiken Ashi candles. And in this case, what I'm looking for is I'm looking for the first close below the Bollinger Bands, and I don't get it until here. Now that was the former oscillator signal that we took over there. Here's the Bollinger Band. So it's just a different signal. It's showing that the price has come a little bit too far, a little bit too fast, but a pullback and a reversion to the mean in the context of an uptrend is what you want to look for. Okay, so that's another way to take a pullback entry. So pullback swing trades are great for playing within a larger time frame uptrend, okay? There are lots of different ways to spot these pullbacks within an uptrend. I've just gone over a couple of different examples. There's hundreds of different studies out there. You can, you know, what I would say is don't make it more complicated than it needs to be. And I went into this in my last class, is that most retail traders put way too many studies in their chart. Less is actually more. And that was part number one. So now we're going to get to part number two. This is actually one of my favorites, which is breakout trades. Breakout trades. Many times you'll see the price squeeze really hard on uptrends. This is caused by a short squeeze. Everybody that was short the instrument all of a sudden is like, uh-oh, on the wrong side of price. They have to buy it back to close out the position, and that helps provide additional demand to the upside, which are being bought at market. So that pushes the price up. So what you end up with is a rally that won't pull back. Boy, talk about being frustrated. You're waiting for that thing to turn around, and all of a sudden, when it flips polarity and those Heiken Ashi candles start to print green, you don't get any pullbacks. It just takes off like this. It just screams higher like that. And you don't get any pullbacks. And I've seen this so many times. Now, what you will see, though, you will see this, is you'll see sideways consolidations and then breakouts. And it starts to stair-step like this. You don't get any pullbacks, but you get these beautiful stair-stepping patterns. Okay, so this is why we need to understand how to do breakout trades. Normally what will happen is that the price will trend strongly until it coils in rest for the next move, and then it moves into stair-stepping, alternating between breakouts and consolidations. Breakout, consolidation. This is where I need a different study set. I can't use an oscillator for something like that. I need to use a trend-based study, which was listed in my Introduction to Technical Analysis program. So I want to identify when the price is coiling like this. So I've used things like the choppiness index. This is an excellent study for identifying something like this. You can also use the ADX, or you can combine the Bollinger Bands and the Keltner channels and use a different study. So there's a lot of different ways to identify when price is just kind of coiling and getting ready to blast off into the next breakout. I love these trades. By far, these are my favorite long setups. So we'll set up the trade exactly the same as the pullback swing. However, the entry signal will be different. We're going to take it on the breakout instead of on the pullback. I will normally set up these trades as a fixed risk setup, which is what we're going to cover next. So keep that terminology for a second here. Fixed risk setup. Tough to say, easy to understand. I'll show that in just a minute here. Aha, there we go. Number 3, fixed risk positions. I've been doing this long enough, and I've been taking the same phone calls year after year, month after month. It's the same thing. Hey, Doc, I've got this really, really bad position. I turned a trade into an investment. I wanted to make this a quick trade, but then I didn't sell it. And this is what happens to retail traders everywhere, is that we not only turn our trades into an investment, so we hold on to them longer because we get the disposition effect and we can't sell out the ones that we're supposed to, but also we use way too much capital for every position. In fact, we don't even have a methodology for sizing the position correctly. So the biggest difference that I found between a professional trader that does this for a living versus a retail trader is most retail traders are very arbitrary in terms of how they size the positions, and almost always erring on the side of using way too much capital for the position. And number 2 is that they're not defining their exits before placing the position. So how many times have you run into this? Just about everybody that's online tonight. I would say without exception, everybody that's online tonight has done this. You've held onto a position, it's turned into a bag on you, and all of a sudden you realize it's way too big. And you're taking heat on the position and you're sweating it out. You don't know what to do with it. That's no fun. That's no way to manage a position. That's no way to get any sleep either. So let's fix this. We can solve both of these problems at the same time if we limit the risk on any one position to a small fraction of our account. I want you to trade smaller positions. So the golden rule of risk management is to limit risk on any one position to 2% of our account. I don't care how big your account is. I want you to trade no more than 2% on any one position. I'm not saying you can't trade just one position. I'm saying you can trade more than that, but no one position should be any bigger than 2%. And that's the beautiful thing about crypto, is that you can run this thing down to 8 decimal places. You can, you trading a position that's only a couple of Satoshis in value. You can do that with crypto. You can't do that with equities. You can't do that with futures. You can't do that with options. All of those are fairly big positions. So this is a beautiful thing. So in this manner, no one position will take you out if it goes against you. I love this. So this is my favorite type of swing trade. You'll see me set these up in the newsletter. You'll say, I'm taking this position. I'm going long on Ontology or whatever it is, or Walton Chain. And I'm setting this up with a fixed risk position. This is how much capital I'm putting into the position. Here's my upside target for it. The stop loss, I have no stop loss. The stop loss is built into the size of the position. I don't care about the outcome of that trade. I don't care. And only when you get to the point where you don't care about the outcome of the trade, where you're not sitting up at 2 o'clock in the morning checking Blockfolio and nervously chewing your fingernails down to nubs because you can't take the risk. We've all been there before. It's no way to live. Okay, so when you learn how to manage position by not caring, that's when you're going to start to make the right decisions. Now we're going to get into what I think is really, really interesting here is trading bots. Trading bots. Okay, so computerized trading has been around for decades. I've done this lots of times years ago, had some success with it, was a lot of work. Actually, I didn't care for it. I went back to discretionary trading. So this has been around to retail traders for at least 20 years, but it's never really caught on in the retail stock and equity and options and futures markets. It's really not. It's just a very, very small percentage of people doing it because it's really hard to do. It's really hard to do, especially with the tools that are available for them. But not so much for crypto. Crypto almost requires some form of this. It's because it's different. Crypto is 24/7. Crypto markets never close. Are you going to be sitting here watching these markets all day long? No, I don't think so. The one thing that makes discretionary trading work within the equity markets is they're only open 6 hours a day, 6.5 hours a day. So you got half a shot to make a decision within a very fixed time frame. That's only 1/4 of the day. With crypto, it's 24/7. They never close. What you're going to find is all these breakouts, all these wonderful patterns will show up when you're sleeping. That's no good, but you can have a bot trade for you. So before I make this sound like it's the greatest thing ever, a word to the wise, guys. A word to the wise before I make this sound too good. This is not a turnkey operation. This is not something where you buy this off the shelf, plug it in, and treat it like an ATM. So if you think you're just going to turn it on and turn it into an ATM, think again. So you may need some fairly deep technical skills just to get it functional. So you've got to understand technical analysis because you're going to be making decisions based on TA. You've got to understand risk management. Just in every bot, it's going to ask you, what's your position size? So you have to understand money management. Okay? So trading bots are only as good as what you program them with. Don't assume that it's going to have some kind of magic inside there. It's no holy grail. So before I discuss these things, please understand I have not accepted any compensation to feature these services. We've been reached out to by several companies and we do not accept compensation for them. So these are the ones that I have experience with. These are what I believe to be best of breed. I've had mixed results with them, some good, some bad. But I would say please do your own research. This is a very fluid, competitive environment. What works today could be run over by next year. There could be a clear winner by next year. Do your own research with this. Okay, so one of them that's been around for a while, and a lot of people are familiar with this, is Profit Trailer, and now there's a 2.0 version of this. So Profit Trailer originally was a fixed fee, so you would pay your 0.03 Bitcoin fee, which was a little stiff depending on when you bought it. Right, and then you basically have the access of that software for life, and you would install that software on your own server. Now what they've done is they've gone to more of a subscription fee, which is probably smarter on their part because recurring revenue works. And so what you're seeing here is that they're charging 35 euros a month for this, and so they have connectors into Binance, Bittrex, and Poloniex. So now it's a monthly subscription service. Those that bought the Profit Trailer 1.0 are grandfathered in. I personally found, I'm being very honest here, personally the initial configuration was not simple. You have to be, personally I think that you have to have experience with either coding or managing software, or be of that ilk or that background to really understand how to use all the support resources. So for example, you do not have a series of training videos that shows you exactly how to set this up. Now what you have in the stead is a whole bunch of guys out there on YouTube that have done their own training videos and are trying to affiliate Profit Trailer. So they're trying to get you to watch their video so that you're going to buy Profit Trailer off of them and use their affiliate link. Terrific. Okay, so it's a little bit jumbled up, and maybe they're going to clean up their act at some point in the future. It's also a good idea to install this on a virtual private server for uptime. So you've got to install this in your own machine. And if you turn your machine off every night, good luck, because all of a sudden it's not going to be able to get you out of signal. You've got to keep this thing up 24 hours a day. Now, here's one thing that's really cool, and I credit Mav for turning me on to this, which is PT Magic, which is a free add-on for Profit Trailer. I would say this is almost a requirement. After running with and without PT Magic, I would say it's not even close. You've got to run PT Magic on here. So what the cool thing about this is that it will dynamically adjust. So based on whether the market is kind of like in moonshot mode or selling off into bear mode, it will adjust the strategies that you have programmed in there to operate differently. And this, to me, is always the missing part of any strategy, of any automated strategy, is the ability to dynamically adapt to what's going on in the market. The price is right. Once again, technical skills are required to get this up and rolling. I ran into several dead ends where I was banging my head against the wall, was very frustrated, and my favorite millennial had to step in and help me here. So I've got to give credit to Mav here. Without his help, I would not have been able to get this thing up and working. The next one here is Crypto Hopper. Now, this one's actually kind of cool. So I lit up a Crypto Hopper account with a different broker. So I was using Binance for PT Magic, and I was using Bittrex with Crypto Hopper, and set this one up. And this is actually quite different. So this is cloud-based. This is based on a server somewhere in some farm somewhere. It doesn't really matter. It's up in the cloud. Okay. And there's 3 different grades of service that you can purchase for this. You can get the low end here at $19 a month. You can go for $49 a month, and then ultimately you can get their top of the line service, which is serious. It's got some serious horsepower here, at $99 a month. Okay, each of them has got a different grade of service. It was relatively easy to get this one going. The online support is well done. It's a very professional firm. It's got a nice look and feel to the site. The configuration is very easy. The UI is great. Everything to go along with it, right? And this is kind of neat too, because the external signals, you can actually subscribe to external signals. Either you can get the free ones they provide, you can grow your own, put your own signals on there, or you can just pay somebody else and say, like in this case, I'm using mining hamster signals for $6 a month. Now the performance, I don't know if this is truly accurate at 53,000%, but it sure sounds good. So it's quite a nice little service. So it is closer to being turnkey, but I have caveats here as well too. It is easy to get Crypto Hopper up and running and to subscribe for this. Even an old guy like me was able to do this. But subscribing to external signals also has the effect of disconnecting you from what it's doing. You see it doing buys and sells, and you don't know what's going on. You don't know what signals. If you've subscribed to an external service, you don't know what those signals are. You don't know what they're doing. All of a sudden, you have somebody else trading your account. You don't know what's going on there. So any trading bot is only going to be as good as its ability to adapt to current market conditions. You must take ownership of the bot. You cannot let it run wild. It will grind your account into dust if you let it happen, right? So don't assume that just because you're running a trading bot that it's an ATM. I personally believe bot trading will continue to become a larger, more significant portion of trading volume going forward. It has to. It has to. The people that are getting involved with crypto are very conversant with this sort of technology. It makes sense. It makes sense. We're going to see more and more trading volume coming through from bots. To that end, scanning is still important. Scanning is sort of like one level removed from trading bots, right? So you're still the person that's making the decision about the trade entry and exit, but scanning is where the software is doing the scouring of the market for you, looking for opportunities. So this is the old school way of doing this, is that once upon a time we selected a watch list, and then periodically you'd flip through the watch list and look for signals, using your brain to do the scanning. It's pretty labor intensive, and you're bound to miss some ideal moves, especially with crypto trading 24/7. With the more popular charting broker platforms these days, again, guys, TradingView is the 800-pound gorilla in this space still. So until the established brokers, suck it up and get into this business, we're still going to have TradingView. So you can scan for opportunities with this. So TradingView, for an example here, is that you're going to hit the screener. Here's the screener, which is over here. So you're going to get familiar with this little button here. So if I hit the screener, if I just hit overview, I can click on things like this. I can sort by column, like change percent. I can say, okay, who's the most expensive? Who's the least expensive? Who's got the biggest volume? Who's got the best rating? I can sort by exchange. I can do all this stuff. So you'll see me do this from time to time in the newsletter, like hunt for, like what moved today? What was the big mover today? Because again, we don't have a market that's really doing much. So it's going to be from time to time, certain selected altcoins will ramp, and it's interesting to watch them go. Okay, so the screener can be very, very powerful. Now, what you can also do is you can actually set up your own custom screens with this. You can set up your own filters in here. Set up your own filters and filter against these, right? So you can set up your own columns based on whatever it is that you want. You can make these based on technicals. So you can set them up on oscillators or technicals or any combination of technicals that they do support. So in other words, if you want to say, all right, show me anything that's running above the 200-day moving average, implying an uptrend, show me something that's just done an oscillator cross and a positive MACD, anything like that. And all of a sudden it's going to spit out all the numbers to you. Or you'll be texted or emailed when something like this shows up. So if you have a specific screen set up on here, so again, you do have to know technical analysis to do this. There's no getting around it. You have to understand how to work the charts and understand how to identify edge on markets. Can't get around that. So you can set up alerts on your live charts. This is one thing I like because I still love to market my charts. I still love to identify patterns and say to myself, okay, if I see ontology break above this flag, I want to get long. And so I can just simply set that up in there. I can right click on this trend line and say, if it breaks above here, let me know, please. And it'll send it to my phone. It'll send it to my email. It'll bot me on top of the skull. It'll do whatever you have to do to be notified of it. Okay, so scanning is very, very important. All right, we're flying through these now. Derivatives is very, very important. Derivatives are going to be, I think, very important this year. So after the 2008 financial crisis, derivatives got a bad rap. People think of derivatives and they think of credit default swaps and mortgage-backed securities and things like that. Guys, we don't really deal with that. We deal with options and futures. And, look, valid derivatives have been around for 50 years in the marketplace. And even actually, you go back hundreds of years and you had contracts. So this is just a more modern version of them with options and futures contracts. And they're primarily in place to manage risk, believe it or not. They're not there for speculation. Everybody says, oh, those derivatives are so dangerous and so risky. No, they're not. They're to manage risk. So I have no doubt that this will be one of the biggest areas of growth around the crypto markets in the coming years. No doubt about this, because these will be coming to crypto. soon. The underlying coins right now are going to be surrounded by risk management and ways to write against them. It's going to be wonderful. I believe if there's going to be institutional involvement in crypto, which is what we should all want, we want institutional involvement in crypto. Say it with me. Because we get volume. Once we get volume, we get liquidity. Once we get liquidity, we have tighter bid-ask spreads. We have less of this monkey business of stop runs going on. We want institutional involvement in there. Okay? They will insist on creating derivatives to manage risk. So this is coming, whether or not you know it or not. If you don't have any experience in it, that's cool. You can grow into that. It's no problem. So some examples of these derivatives that I'm talking about, like futures contracts. You guys have heard of Bitcoin futures, the XBT, the BTC contracts. One's from the CBOE, one's from the Chicago Merc. Leverage proxy derivatives like BitMEX, which those of us in the U.S., we can't trade, but we can at least experiment with. Or there's other things like binary options and Bitcoin options through Deribit. I believe Deribit's a German firm. Again, the U.S. is not allowed to trade these. So these are all based on a contract which you can buy or sell to open. This is the great thing about these fixed risk instruments. You can define your risk to them. You can sell to open. So one thing, I don't know if you guys have noticed this or tried to do this, but it's very difficult to short sell crypto. So not only is it not all coins are supported with short selling, but you short sell, you're going to have to pay your broker interest rates. They're going to have to go out there and borrow for you. And also, guess what? You have unlimited risk. I can't think of any reasons why I'd want to be short selling any crypto right now. I think it's a bad deal. You want to do that with derivatives. So why use these? Normally offers leverage. So leverage is a good thing if you use it right. It is more efficient than tying up lots of capital. It's easier to create bearish positions versus selling short the asset. I hate short selling. I think there's so many bad things that can happen with that. We can also offer income possibilities with derivatives, which you really can't do right now. Well, you sort of can do if you get into mining and staking and those kind of things, but that's pretty intensive, right? It's a lot of work to do that. We can offer a very pure and simple directional trade with futures. There's not a better directional instrument than a futures contract. Okay, so here's an example. This is on TD Ameritrade Thinkorswim trading the XBT. This is the CBOE version of the futures contract. And you can see the dome over here. This is a ladder trader. If I want to go long, in other words, if I want to go long, buy low, sell high, I can simply set up a bracket trade here where I go long, get filled, and then it sets up automatically, it will set up a stop loss and a profit target at whatever I choose. And I can use multiple contracts. I can stagger these. I can do whatever I want to with this. This is an excellent way to set up a directional trade. You can also start to see that there actually is some depth of market here. Now, it depends on what time of day that you do this, because you have to, the market does follow the sun, so you tend to get the U.S. version of it, you tend to get the Asian version of it, you tend to get the European version of it. Each one of them will have their own volume peaks to this. So play with liquidity. Now, there's also, here's BitMEX. I'm not going to explain what this is, but you can basically play around with the version of leverage on here, which is kind of amazing. And they will automatically, you can automatically fix the risk on any position. So instead of an unlimited risk short sell, where all of a sudden you get forced liquidation on you, they can set up the parameters of this contract on BitMEX to it's either going to be working or not working. So I think it's an outstanding way to do this. Okay, we're flying through these things. Intra-day trading, also known as day trading, is pursuing short-term trade setups that typically last only minutes. Now, this is sort of the, if I were to give this an analogy, this would be the athletes of trading. These are people that are making very short-term decisions. I'm not suggesting that this is a good outlet for a lot of people. If you're working a job, This is not something you want to do. If you're trying to do this from your smartphone at a Starbucks, this is not something that you should be doing, right? This is only people with access, with some screen real estate and some power. This requires very liquid markets that have enough velocity to make the reward and the risk worth it. We're using the same techniques as pullback and breakout swing trades. It's just shorter time frames, just quicker, right? So we're making faster decisions with these. Quite often the biggest challenge is liquidity and movement. Just because you can day trade something like a Cardano or a Nulls or a Ripple doesn't mean it's necessarily a good idea if it doesn't support the liquidity necessary. So if I'm going to day trade crypto, I want the biggest, baddest, most liquid, most volatile instrument possible, and it's still Bitcoin for me. Right now it's still Bitcoin until somebody, and until some form of flippening happens where somebody throws, kicks them off the throne, it's still going to be Bitcoin. So trading intraday with narrow targets and stops will get you picked off if you're trading the underlying market. My preference here is to, again, use fixed risk positions with only a limit target in place. So in other words, I've got a profit target, but if the trade doesn't work out, I fix the risk based on the position size. Or if I'm trading futures like the bracket I just showed you, I've got a one cancels other bracket. So in other words, here's the entry point, and then I've surrounded it by a fixed bracket where that's my stop. Here's my profit target limit. And I can always, if the trade's going positive, I can always pull the stop up here to break even. So I can always manage risk on these types of trades. Okay, couple left to go. Thanks for your patience here tonight. We'll get into the Q&A in just a minute here. Trading MainNet ramps. This is something that Mav brought to my attention. This is not something that I had thought about, but I think this is actually kind of cool. So a project can go from testnet to mainnet, and that can be a big deal because that shows that that project is all of a sudden, it's growing up, it's maturing, and it may be that much closer to revenue if it actually can make it through production onto mainnet. And what we're finding is that this dramatically will increase the price of the coins. So here's a good example like Golem. And this was last month. Golem announced on the 10th. You can see that this was the 10th, and here's that date. And, it just sort of fumbled around a couple of days later, and finally, watch out for these candles. This is where you don't want to chase after something like this. But, you got in way early enough to be able to do something. But most people didn't. Most people didn't hear about it for another 2 weeks. Here's Nulls. Nulls is another example of this, where it was announced hitting mainnet, and you had plenty of time to be able to trade this. It even featured a pullback along the way. And you can see how the character of Nulls changed absolutely dramatically. Look at the volume that's come in ever since the rumors started to hit. This is a coin growing up and becoming more mainstream, and it's a very simple play. So what will separate you from the typical retail trader, which is fear missing out chasing, that's what FOMO is here, is your ability to get plugged into where this information is freely shared. Somebody like a Mav is a guy that's going to know, not every single one, but he's going to know his fair share of these types of coins. This is what's always done it for him with a lot of his opportunities. Now I'm going to get into the last couple. I'm going to go through this fairly quickly here so that we can meet our time requirements here. Pairs trading. This is the image that I want you to think of when you're trading a currency pair. Kind of a teeter-totter or a seesaw here. What goes up? One side goes up, one side goes down. So if you're trading most cryptos, you're actually trading a currency pair. Think about this. One's on the numerator, which is typically the coin of focus, and the other is the currency basis. In this case, most of the time we're trading against Bitcoin. So what happens to the value of the pair if Nulls rises and Bitcoin drops? If the denominator drops, and the numerator stays steady or rises, it's certainly the entire value of that fraction is going to go up, yes? Now, what happens if the opposite occurs? What happens if Bitcoin rises and nulls, in this case, actually starts to drop in value? Well, the exact opposite. The value of that fraction is going to go down. If you perceive an opportunity where your coin might gain support, yet you believe that Bitcoin or your base currency will stay flat to down, hello, what's happening right now to Bitcoin, guys? We see Bitcoin staying flat to going down, then you have an edge with this. So if you can identify an altcoin right now, which is particularly strong, you've got yourself a pairs trade. It doesn't have to do much of anything to start gaining value. And then lastly is probably one of the most conservative ways to do things, but this may be valuable. This may make a difference for somebody out there. Trading into stablecoin. So stablecoins are meant to do what the name implies, which is to act as a stable source of value that's less volatile than other base currencies. So certainly Bitcoin is about as volatile a base currency as you're ever going to see. Now, regardless of what you think about Tether, it certainly is trying to do its job as a stable coin. Okay, the strategy is the same ones that individuals with their retirement accounts use. So what happens is people that have retirement accounts will typically do this is that when they see a particular signal showing up, they will take their assets and take them into cash. And so therefore they don't have to endure this withering correction or bear market, so they just park them into cash. So if the right signal shows, move your funds out of the coins and into stable. Okay, so in this way you don't have to endure the next sell-off. And then maybe what you can do, not to suggest that anybody can time the market, we're already reminded all the time that we can't, but reinvest in the next swing from a lower price point. Certainly if you're in this to the long haul, this might be a good strategy for you. Again, very, very conservative. All right, let's quickly do a recap. I'm a couple minutes behind, but I'll save time for as long as you want to on questions. So tonight we've looked at short-term pullback strategies. We've looked at short-term breakout setups and fixed risk positions and trading bots, and looked at scanners and alerts and trading derivatives for crypto. And we've looked at intra-day trading. We've looked at identifying coins with MainNet ramps. We've looked at currency pairs and stablecoin swaps. So we've looked at a lot of stuff tonight. And hopefully my hope for you guys is that there's something in there tonight which triggered off something for you to say, hey, I never thought about that. Maybe that's something that I should be doing. Maybe that's something that I can get some value from this market, which seems to be just drifting lower. Okay, so if you've never heard of these suggestions or techniques before, they will make an immediate impact on your skill set. Like, think about all the stuff that we talked about tonight. Wouldn't you be in better shape if you had those different skills? I think so. So some of you may just take what I talked about tonight and off you go. You're in better shape than where you were 45 minutes ago. Great, that's awesome. This is why we do what we do. But those of you that want to take it to the next level, I do have a little bit more for you. The Ready Set Crypto Short-Term Trading Strategies program is now being announced for release. Let me walk you through what's in this program. I tend to do a lot of my stuff in a pyramid format because I like to build a foundation and then build on top of it. I like to build a nice stable foundation for a class. So I always start out with an overview, like what are we trying to accomplish with this? And then the very first thing that I teach is risk management. You've got to get your risk management under control. This is what the professionals do. This is what they live on. If you run out of capital, you're out of business in this business. So you've got to maintain your risk management. And then we get into understanding long versus short. When can you go long versus short? What's the best ways to do something like that? And then I get into the different strategies, pullback strategies, breakout strategies, right? We'll get into scanning, show you how to set up your scanner. And then we'll go through some overviews of bot trading. Like how would you set up your bots? And then I will cover derivatives. I will cover derivatives, and then something which is a little bit different and something I believe in very strongly is like once you start doing a lot of this type of trading, you're getting a lot of iterations and there's plenty of room for improvement. So a lot of what happens to retail traders is they'll try something once or twice, it won't work for them, and they just sort of move off to something else. And what I want you to do is to find that one thing that really does it for you and then get better and better and better at it. And so I'm going to have a whole module on performance improvement, and then ultimately we're going to put the capstone together by showing you how to apply this all together as one big holistic program. All right, so the class. I am the instructor, Doc Severson, and there's going to be over 3 hours of video content in the members area. This is how you're going to access it. Here's the price for this. It's a $99 one-time charge. It's on sale for $79 tonight. Or for those of you that are premium members, you can get the $10 coupon off and get it for $69 using our coupon. So it's in the newsletter. It's right above the main video, right above the main video. So it's going to be $99 by this weekend. It's going to go up to full price by this weekend. But if you get it for $79 or $69, if you can, go for it. So the discount disappears this weekend. It's going to be up to full price. So this is where you go. If you're interested in joining me tonight, go to readysetcrypto.com/short. Again, not available to the public, only available through this link. You can't get there if you just go out to the website tonight and just go to the store. You won't see it. So you have to go to this link, readysetcrypto.com/short. Again, you can see that the price is $79 for right now. If you apply the coupon, it'll get you for $69 price. So something else that we decided to do is a lot of you may not be up to snuff when it comes to technical analysis, and so we wanted to put together a value bundle for you guys. So I'm going to add in the Intro to Technical Analysis class. So we're going to have the short-term trading class, again, sale for $79, Intro to Technical Analysis list $59. So we're going to get the value bundle for $128, or you can also use the coupon for that and get it for $118 if you're a premium subscriber. So there's benefits to being a premium subscriber, guys. Absolutely benefits towards that. So this is where you're going to go, readysetcrypto.com/TAT. This is the trading and technical bundle, not affiliated with any kind of tattoo. So readysetcrypto.com/TAT. Again, you cannot get this, is not available to the public, this value bundle for $128. You have to go to this website here, readysetcrypto.com/TAT. Okay, so with that, I'd like to thank you guys for your attention. I'm running just a few minutes late here. There are the two URLs. Again, readysetcrypto.com/short for the short-term trading strategy discount. Again, the price goes up this weekend, guys, and there's the readysetcrypto.com/TAT technical and trading bundle. I want to bring you over to the store. I want to show you this on the store. So if you go to the readysetcrypto.com/store over here, you can see some of the other classes that we have, just to give you an idea of some of the breadth that's available for you. Of course, there's the premium newsletter. We also have, Mav is finishing up the security and wallets class. So if you want to understand how to run a wallet and offline storage, things like that. Also his fundamental analysis class, how to find your next big crypto. So this is one of our most popular classes out there. And of course, the intro class is the first one that we did. This is basically for those that are brand new off the street, never traded crypto before, don't quite understand how it all fits together. This is the class for you. And then, of course, about last month, I did my technical analysis intro to TA class. So all that, that becomes part of the bundle. So again, you can check these out, but also notice that the class that we're talking about tonight, the short-term trading strategies, is not part of that. So there's the URLs. There you go. Thanks for your patience. And now I will